You're listening to the Financial Source podcast on YouTube.
Okay, so if you're just glancing at the financial headlines today, you might think it's, well, a pretty quiet day out there.
Deceptively quiet.
Right. They're all saying that the dollar's flat, bonds are steady, everything's calm. It's not really the whole story, is it?
Not at all. It's that classic image, the duck on the water. It looks perfectly calm on the surface.
But it's paddling like crazy underneath.
Exactly. And the sources we're digging into show that this paddling involves everything from Japanese elections to some very interesting banking memos coming out of Beijing.
So that's our mission for this deep dive. Let's get under that surface and see what's actually moving the machinery. First up, why is the dollar just sort of pausing?
And why is the Japanese yen suddenly flexing its muscles?
And my personal favorite, how a tech giant issuing a new bond can quietly throw a wrench into the entire U.S. debt market.
All right, let's start with the currency chessboard. The U.S. dollar index, the DXY.
Yeah, which is technically trading flat. And like we said, that usually means nothing to see here.
Usually. But this isn't a nothing flat. It's more of a pause. It's really just holding on after getting sold off pretty hard yesterday.
That was from the risk-on mood, right? Investors feeling brave and dumping the dollar.
Sure. They were moving into riskier assets, but the bleeding stopped, and the reason why is, well, it's not really about the U.S.
It's Japan.
It's Japan. The dollar is down about, 0.3% against the yen. That is not a quiet move.
No, that's a real signal, and it ties directly back to the political situation there.
It does. The LDP, the Liberal Democratic Party, they just secured a key election victory.
And the market reads that as stability. But here's the twist, and this is what I find fascinating. Normally, stability, maybe some stimulus talk, you'd think that would weaken a currency.
Right. You'd expect them to print more money or something along those lines.
But the yen got stronger.
Because the market is looking one step ahead. They're betting this political win gives the Bank of Japan the political cover it needs to finally start tightening its policy.
They're pricing in a rate hike.
Precisely. They are looking past the stimulus and betting on an April rate hike. It's that anticipation that's pulling money into the yen.
So while Japan is making these big moves, Europe just feels steady. The euro is parked right around 1.1990.
Yeah, the ECB just refuses to budge. It's the anchor in all this. And honestly, the UK is kind of in a similar boat.
I thought that was so interesting. You have the Prime Minister's Communications Director resigning. I mean, you'd expect British politics to give us a little drama.
At least a little bit of noise, yeah.
But nothing. Sterling didn't even blink. It seems investors are finally buying into Prime Minister Starmer's stability pitch, regardless of who's on his team.
And that's a sign of a maturing market, I think. But if we want to talk about noise that does matter, we have to look at the bond market.
Okay, yes. This is where the whole quiet day narrative just completely falls apart.
It really does.
Yeah.
Because one of our sources is explicitly reporting that China is urging its banks to curb their exposure to U.S. treasuries.
Wow. Okay, that is a massive signal.
It is. They're citing market risks as the official reason, but the bottom line is that one of the biggest buyers of U.S. debt is, taking a step back.
And that alone is going to put a ceiling on how high U.S. bond prices can go.
For sure. But it's not the only headwind. There's a corporate angle here, too.
Right, Alphabet. Google's parent company is in the market.
And they are issuing a huge multi-tranche bond. This is where supply and demand really collide.
Yeah, because think about it. If you're a big institutional investor, you only have so much cash to deploy, right? It's a finite bucket. And if Google comes along offering a shiny new bond with a decent yield,
that's money that is not going into government debt.
They're in direct competition for that capital. It's a double whammy. You have China pulling back demand.
And Alphabet soaking up the available liquidity with new supply. It perfectly explains why U.S. Treasury futures couldn't rally today, even with a weak dollar.
The cash was just being vacuumed up by big tech. It's wild. Meanwhile, Japanese bonds are just doing their own thing.
Yep, recovering ahead of an option. Very technical, very local drivers.
So let's wrap this up. The key takeaway for you listening is simple. Don't let the flat charts fool you.
No, what looks like calm on the surface is actually this incredibly high-wire balancing act.
You've got Japan's market betting on future rate hikes.
You have the UK market ignoring political drama.
And then this incredible liquidity battle in the U.S. between the Chinese government on one side and Silicon Valley on the other.
It's pretty amazing when you lay it out like that, and it really forces you to ask, well, a pretty difficult question for the future.
What's that?
If the world's biggest buyer, China, continues to step back from U.S. debt,
Right.
at the exact same time, American companies need to borrow more cash than ever. Who's left to pick up the tab?
That's a very good question. Something to chew on.
It's the one that should probably keep you up at night.
Thanks for diving in with us.